this video, I'm going to teach you the best order block trading strategy for Forex and crypto. This is the most profitable order block strategy that I have seen. The shocking thing is most YouTubers don't talk about it, which means you will be among the first few people to know about this strategy. This order block strategy is gotten from Smart Money concept, which means we will be trading alongside big institutions. This strategy is called order block in order block, and to use this strategy, you need to know how to identify order blocks, break of structure, and change of character. What are order blocks? Order blocks are price zones where large institutional traders have placed a significant buy or sell orders. These zones are viewed as areas of high liquidity that can act as support or resistance. In simple terms, I look them as areas of supply and demand, and when they are seen in a bullish trend, they are called demand. They can be used as demand zones, while when they are seen in a bearish trend, they can be seen as a supply zone. So as you all know, there are two types of order block: the bullish order block and the bearish order block. The bullish order block are seen uptrends, and to identify this, you need to see two candles. One is small weak red candle, a small weak bear candle, and a large candle that indicates large buy orders, or a weak green candle and a large green candles that indicate large buy orders. While in a bearish trend, what you need to see is a small green candle and a large sell candle or bear candle, which indicates large sell orders, or a weak red candle and a large green candle, which indicates large sell orders. The second rule that we must know to enable us trade this strategy is for us to be able to identify break of structure and change of character. Break of structure is seen in a trend, either an uptrend or a downward trend. In an uptrend, price is always making series of higher highs and higher low, higher highs and higher low. While in a downward trend, price is always making series of lower highs and lower low, lower highs and lower low, lower highs and lower low. A break of structure is seen when price push upward, goes above the previous higher high to create a new high. So when price retraces and pushes upward to create a new high and breaks above the previous high, we say there is a break of structure. This is what we call break of structure. When price push upward to break above the previous high, we say there is a break of structure. While in a downward trend, when price pushes downward below the previous low, we see that there is a break of structure. And also when price pushes downward below the previous low, we see there is a break of structure. Where change of character is seen, where price changes direction from being an uptrend to a downward trend, and this can be seen when price breaks below the previous swing low. This swing high, swing low, swing high, swing low. You can also call it higher high, higher low, higher high, higher low in an uptrend. This was the last higher low that price created before creating this particular high. So when my price retraces and goes below the previous swing low, know that market are changing direction from being an uptrend to a downward trend. I'm going to go to the chart and show you guys this, but you know that I already made a detailed video about order blocks and change of character and market structure. I highly recommend you watch that particular video if you don't know how to identify order block and market structure. In the chart, we can see market breaking structure to the downward side, indicating that this is a downward trend. This was a low and this was a lower low, while this is a lower high. You can see when price pushes downward to create a new lower low, we see that there was a break of structure to the downward side. You can see when price pushes downward to create a new lower low, see that there was a break of structure. When price pushes downward to create a new lower low, see that there was a break of structure. At this particular place, you can see price pushes upward above the previous lower high, then we call this change of character, and from this place market started breaking structure to the upside. Then for order block, I said to identify order block, if we look at two candles, a small green candle in a downward trend, you look at a small green candle and a large red candle, which you can see at this particular place. You can see price retraces to test it before going downward. At this place, you'll see a small green candle and a large green candle, which indicates an order block. After knowing this, now we are going to go into the strategy proper. Before I continue, if you are watching this video, please do to like down the comment section and comment where you are watching from. And if you are new, subscribe and turn the bell icon. Please comment where you are watching from. I want to know where you guys are watching this video from. To use this particular strategy, we need two time frame, a higher time frame and a lower time frame. We need to use the higher time frame to look for the other block and the lower time frame to find another block and use it to take a trade. Remember, the name of this strategy is called other block in an other block. So we need two time frame for this. So I'll be making use of the 4-hour time frame and the 15 minutes time frame. To do this, the first thing is for us to mark the break of structure to the upside. That's the first thing. So at this place, there's a break of structure at this particular place to the upside, which there's a break structure to this side. We'll look for the other block that called this break of structure, and you can see the other block candlestick is this particular grey candle. So we have to draw out the other block candlestick part. After that, we need to go to the lower time frame, which in this case is 15 minutes time frame to look for entry. So guys, in the 15 minutes time frame, what can we see? You can see this was the other block that we draw out. So what we should be doing is waiting for price to retrace it back to our other block, and once price retraces, then we look for a break of structure and then take our trade. So as you can see, that's like what we expect. You can see price create this particular lower low, lower high, lower low. Then there's kind of consolidation. This place is created this particular lower low, and then upwards. You can see this is a lower low and this is a low. Like I can see at this place, you can see price break up, and this was a break of structure at this particular place. So once this break of structure happen, what we'll be doing is looking for the other block that's called this particular break of structure. So if I zoom this out, I'm going to see this small red candle. So this is the other block that caused it. All I need to do is simply draw the other block out. Once you draw it out, then wait for price to retrace it into this particular place, then we could take our trade. And as you can see, if I move, let me click this, you can see that the week of this week to actually touches this particular other block. For me, we can simply take our trade. Market is not essential, that's why I'm not seeing this moving, but this is how we would have done it. So guys, let me show you guys another example. So guys, in this other example, you can see that if you check the chart, we were in a downward trend. Market criticism of lower lows and lower highs. And then at this particular place, there was a break of structure to the upside. And if I'm to explain what I'm talking about, you can see at this place there was a low, right? At this place, market created a low at this particular place, and this was a high, kind of a retracement, which means this was a lower high. Then here market created a lower low, then retracement a lower high. Then from here market created this particular low. The market started pumping, and at this particular place there was a break of structure to the upside. As you can see from here, market was a break of structure to the upside. So now that we have agreed that this is an uptrend, so as we all know, at this particular place, the most recent break of structure to the upside, want to do is mark out the other block. And guys, the other block at this particular place is this red candle before this long candle. So once I've done that, the next is also go to a lower time frame. And lower time frame, all we need to do is really wait for price to retrace back into this particular our other block on our forward other block. And once price retraces into this particular other block, all we need to do is wait for change of character. Once there is change of character, then simply wait, simply draw out the other block that causes a change of character, and wait for price to trace it back to this particular other block from here, and simply take your trade. And when taking your trade, your stop loss should be below this particular region. The other block should be within this particular place, and you can target this particular level as your TP. Then you can go to 4 hours and use the 4 hours break of structure as your other second TP. So guys, this is it for this video. Please do it to like, do it to subscribe. If you have any question under the comment section, don't forget to tell me where you are watching this video from. I'm going to see my next video. Peace out.